All right, ladies and gentlemen, MrSotko here. Welcome back to the channel. Got a whole bunch of good crypto news stuff for you today, and it's been a long time since I made a video, and people are wondering what I think of the current crypto market, and it's been pretty stagnant for a while. And, well, with the whole 9% inflation we see in the United States, and, well, quite frankly, I don't believe that, considering we have a 50% increase in gas prices, something like 40% increase in meat. I think they're lying to us just a little tiny bit, and it seems like our hedge against inflation, Bitcoin, is really not the case. As we can see, since about 2020, when COVID came along, starting in March of 2020, Bitcoin went down with the stock market when the COVID lockdowns occurred, which makes total sense because if the average person is buying Bitcoin and the average person was affected by the COVID lockdowns, well, then the average person is going to be selling their Bitcoin in order to pay their bills if they can't be going to work, etc. So that makes quite a lot of sense. But however, ever since, every time we see a correction in the traditional stock markets, we see this typical correction in Bitcoin as well, which is sort of interesting. So is it a hedge? Is it a hedge against inflation? That's not, we can't really tell yet. We haven't really seen a major crash, and I'm not really so sure about that. So, Bitcoin came out in 2009 when the stock market was sort of correcting after the 2008 crash. So we have yet to really see a true bad market just yet, except for the whole COVID thing, which was sort of a intentionally created situation. Not that COVID was, but the fact that the markets were shut down intentionally for it. So Bitcoin drops to 35,500 as 1,000 point Dow correction marks the worst trading day since 2020. So if Bitcoin is a hedge against these markets, then why is Bitcoin going down with the Dow and the markets going down with it? And I have these markets up, and you can see just in the past month, the Dow is down by 4%. And if you go out to the 6 month, it's even worse. The NASDAQ down by 12%. Again, if you go down to the 6 month, even worse. S&P 500, 8% down. So the markets plunged into disarray on May 5th as the Dow Jones seen a 1,000 point drop and Bitcoin price plummeted to 35,500, which admittedly was not that much lower than it was the previous day. The widespread weakness comes as traders have had more time to digest the recent half-point interest rate hike by the Federal Reserve, which, once again, the Federal Reserve has been raising interest rates, and they intend to do it by about 0.5% every month or so for the next probably at least the rest of the year, which means it's going to be harder to get loans. It means your credit card is going to have its interest rate increased. It means if you have a mortgage, a particularly variable rate mortgage, is going to increase. And so it's the economy is not going to be doing good for quite a while. And as for crypto prices, I really don't see them increasing dramatically for at least a couple years, not till 2024, and to be realistic about it, probably not till 2025, because the Bitcoin halving occurs in, I think, March or May of 2024, and it usually takes about 6 to 9 months after a Bitcoin halving till we see that dramatic price increase that occurred in 2020. And it didn't actually increase until about 2021. Same thing with 2016. It didn't actually start exploding until 2017. Same thing with 2012 halving. It didn't actually start increasing dramatically till 2013, etc. So it usually takes a little while after that. So is Bitcoin a hedge? I really don't think so at this point. I think considering the average people buy Bitcoin, and then when the markets crash or there is a recession or depression, the first thing people are going to do is sell Bitcoin in order to pay their bills and buy food. And so the first thing that's going to happen is Bitcoin is going to go down in price, as the average person doesn't have a lot of money on the side to simply stay afloat. They're going to have to use their investments. So now this article is a little bit old. Again, it's from March, but Ukraine government now accepts Bitcoin and Ethereum as legal tender. And you might be wondering why I'm reading this, because this sounds like a good thing. This sounds like sort of like a really great thing for Bitcoin. However, I see this as a bad look for Bitcoin. An interesting fact is that Satoshi Nakamoto did not like WikiLeaks accepting Bitcoin because it was a bad look for Bitcoin. He also did not like the Silk Road accepting Bitcoin as payments either, because that was when Bitcoin was truly becoming a currency, and he didn't like that because it was a bad look for Bitcoin, because it was basically a bad website, and WikiLeaks had a bad rap as well, and it was a bad look for Bitcoin to be associated with that. And to be now everyone is sort of rooting for Ukraine here. However, I'm not really going to get into this article because Zelensky signed a bill to accept Bitcoin and Ethereum as legal tender in order to help with the war effort. But on the same side, Russia is, trying to use cryptocurrency to blunt the force of U.S. sanctions. And again, this article came out in February of 2022, and I believe this was before Russia even invaded Ukraine. This is when they were thinking about invading Ukraine, planning on it. And this is going to essentially make lawmakers all around the world add additional sanctions to Russia and add additional thought to Bitcoin and add additional KYC to exchanges, and possibly think about how they can add additional laws towards Bitcoin. Now, of course, governments can't shut down Bitcoin, because if there's any nodes around the world, of course, Bitcoin is going to continue working. But Bitcoin needs to stay in sort of the limelight just a little bit. We don't really want all of these politicians making laws towards Bitcoin and putting it towards, like putting it in the light, essentially. We really don't want that. Like, we want non-KYC exchanges. And of course, there's always DEXs, but quite frankly, most DEXs just aren't that good. They don't have a lot of liquidity and volume. If you've ever tried to use a DEX, half the time there's not enough liquidity, and you end up getting robbed in terms of volume and things like that. So the last bastion of non-KYC exchanges is slowly fading. And so more and more transactions that you make on all of these KYC exchanges is just now everybody knows all the transactions that you make with Bitcoin. And at the same time, Bitcoin is a public ledger, so that's sort of what it's designed to be. But at the same time, if everyone knows and the government knows every single transaction you make on Bitcoin, is it really any different from fiat? And it starts to become a problem at that point. And then you get to things like this: U.S. Treasury sanctions Russian Bitcoin miners as war enters its third month. So now Russia has attacked Ukraine, and that's a big problem. However, what does that have to do with these Russian Bitcoin miners? And that's where this problem starts to occur. This private Bitcoin mining company all of a sudden gets these sanctions put on them because Russia is thinking about possibly using Bitcoin to go around these sanctions that these countries have put on this country for declaring war. Because Russia isn't allowed to declare war on other countries. Only certain countries are allowed to declare war on countries. Russia isn't one of those countries that's allowed to declare war. Certain countries are. If you get what I'm saying there, Russia isn't allowed in that club. So, not that I think that any country should be, but there's a club in Russia, you're not part of it. So all of a sudden, Bitcoin miners are now being sanctioned. And see, this is the problem that will start to occur. Now, exchanges will be hit. Bitcoin will be seized. Bitcoin miners will be sanctioned. And this is the problem that will occur. So like when Russia tries to use Bitcoin to, avoid these sanctions, they put Bitcoin in a bad light. And so Satoshi Nakamoto was not wrong when it comes to WikiLeaks accepting Bitcoin as donations way back in the day, or the Silk Road accepting it as payment back in the day. It puts it in a bad light, and then lawmakers start to go, well, what is this? All it's used used for is drugs and money laundering. And maybe they're not wrong to a certain degree in that sense. For the rest of us, we sort of get the short end of the stick. Now, for a little bit of different news for the day, NFT of Jack Dorsey's first tweet struggles to sell. So NFTs, I've never really been that big of a fan of. I like the technology. I like the fact that you can take some art or some property or pieces of something and split it up into an NFT and make it partial ownership or complete ownership of something as a digital ownership, as a noder, on the blockchain. That's certainly good. But all of this art, these JPEGs that are basically going around, these bad luck Brian memes selling for $36,000. Basically, I'm not a fan of the JPEGs. Now, if it's this super incredible artist who sells their art for an incredible amount of money, that's one thing. But if it's a bad luck Brian meme that sells for $36,000, I don't really care for that. All these JPEGs selling for $36,000, I right click on you and copy paste. So the buyer of a non-fungible token of Twitter co-founder Jack Dorsey's first tweet says he may never sell it after receiving a series of low bids. Malaysia-based Sina Estavi has been offered just over $6,200, about 0.2% of the $2.9 million he paid for it. Mr. Estavi has compared the digital asset to Leonardo da Vinci's Mona Lisa, which I don't think you could be any more wrong about pretty much anything. The tweet, which says, "Just setting up my Twitter," was first posted in March 2006 and was auctioned off last year by Mr. Dorsey for charity. Mr. Estavi bought the tweet in the form of an NFT in March 2021. I bet he thought he was just buying gold. He just bought that for $2.9 million. I bet he thought he was just getting a great deal for that. He couldn't wait to sell that for $10 million. He just couldn't wait. He was just sitting there just rubbing his grubby fingers, just waiting for that to just appreciate. NFTs have been touted as the digital answer to collectibles. And yeah, see, I don't mind that. A digital answer to collectibles. I don't have a problem with that. I don't think that's an entirely wrong answer. But when JPEGs go for $2.9 million, I think that's a little bit egregious. I don't think anybody's gonna make any money at that point. I think if a friend came up to me and he's like, yeah, I just bought Bad Luck Brian meme for $36,000. I just don't know anybody else in the world who is gonna flip that for, like, say $50,000. Like, there's just nobody else out there who's going to buy that for more money than $36,000. Like, it's just not going to happen, especially like once the hype fades, like once it goes down, like once this fades, because let's be quite frank, like crypto goes in these fades, in these phases of like popularity. There's like the crypto kitties, and then there was it was like proof of work, right? And it was like new coin after new coin after new coin, and that was like proof of stake. It was like new proof of stake after proof of stake. And there was like new NFTs, and then it was like for a while there it was like yield farming and this, that, or the other thing that would come along, and they basically last for like 3 or 4 months, and then it's a new thing and a new thing. And for a while there, it was like those BNB tokens that was basically like these super high fees that as long as you hold on to it, like you get all the fees. And those lasted for about 3 months, and then it just moves on to a new thing. And that's the problem with NFTs. Is it's just like the NFTs are forever. Like it's not like they go away or anything. It's just like the fad goes away. The money goes away, and it goes on to the next big thing. And then last week, Mr. Estavi announced that the tweet was up for sale. He pledged to donate half the proceeds, which he estimated to be $25 million. He thought that was going to sell for $25 million. Good luck. Who? Like, just who's going to buy it, though? However, the highest bid valued at $6,200. He claimed that he had been offered $10 million for the tweet. However, the highest bid was just $6,200. So guys, just watch the NFTs, how much you're buying. I'm sure people have made a lot of money on NFTs, but just not you, not me, right? It's just not going to happen. Careful with that $2 million you got floating around, guys. Don't buy any NFTs with that. But looking at CoinGecko here, $36,000 Bitcoin. So it did go up a little bit after that $35,500 drop, after the Dow drop there. But Ethereum, 2,698. So again, the crypto market is very stagnant right now. Nothing is looking that good. There's just really nothing good on the horizon. There's very poor news on the horizon. I mean, Elon Musk bought Twitter, and people thought that maybe he's going to implement Doge on Twitter because he's all about Doge, but so far there's no news of that or anything. If there was news on that, I'm sure Doge would go up in price and then sharply drop, of course. So again, watch for that. But that's about it. There's really nothing on the horizon. There's no good news, and that's what crypto really needs. I've been saying that for years. Is that crypto sort of relies on good news, and then it sort of fades, and then it gets good news and then fades. But for the most part, I don't see anything on the horizon just now. And for the most part, if you're investing in crypto, just be buying and buying and buying until 2025 for the most part, because Bitcoin is going to have in 2024. And then, of course, there's going to be sort of a 9-month lag until there's a big explosion when people find out that there's not that much Bitcoin going around because of the halving. But that's all I have for you guys. I hope you enjoyed it. And as usual, I'll see you guys next time.